Let's unpack those numbers now with Nesan Nair, who's from Sasfin Securities. Nesan, as always, thank you for your time this afternoon. Let's speak about those overall market movements. I've just mentioned in my intro that we saw a nice rally coming from the mining shares as well as the banking sector, and the rand remaining surprisingly resilient against the dollar. I mean, is that because of a weaker dollar, or is a bigger story there?
Yeah, good afternoon, Rafi. You know, it was a strange start, I think, on the day. And at 10 o'clock, we were stuck at the 64,000 level. This is a level that goes back almost to May. And, you know, I think a lot of us were fearful that we might actually dip below that level, which would indicate, you know, the start of a bear market going into what's left in the year. But that didn't happen, actually. You know, we picked up, we closed up at 64,500 or so, but at one stage we were 64,700, as you mentioned, largely attributable to the resource counters. And there wasn't anything specific. I mean, energy was a big gainer, I think, on the U.S. futures, and even currently on the U.S. markets, the oil price up about slightly under 2%, but Sasol was up over 7%. So I think it could have been a little bit of bargain hunting going on out there. You know, certainly the financial shares and the banks that you mentioned have been the target of lots of overseas investors looking for value stocks in the South African market. The fact that also we went down to lockdown level 2, I think bodes very well for the economic recovery, or the prospects of an economic recovery. I think I should say that, you know, given what we've seen in the last 18 months in South Africa. So, you know, potentially setting ourselves up, you know, for a nice end to the year, I think. And if you look at some of the company results that came out as well, I think there's also strong indications that investors are slowly coming back when the opportunity comes in to buy.
And let's get into some of those company news. Last week, Sanlam releasing results indicating or confirming the sale of some of its UK operations. Now, that conclusion of its plans to sell several of its UK-based operations, including its life insurance and wealth management, the number confirmed in the SENS announcement today for about £39 million. Your thoughts on this transaction and really Sanlam's more focused view in terms of running its business going forward?
Yeah, it was an interesting one. You know, a lot of South African companies obviously looking to sell out of the UK now. Famous brands also, you know, made some acquisitions a few years back and having to take some big write-offs. Truworths, you know, I think the list is quite an extensive one. And I think Sanlam just, you know, re-evaluating their priorities. Sanlam has done exceptionally well in emerging markets over the last 15 years. You know, the latest one being the sort of North African operations of Saham, which is like a short-term insurer. They did that acquisition and then they bought a bigger stake in it. And that seems to be doing very well for them, or reasonably well for them. And of course, prior to that, they made a substantial investment on the Indian subcontinent in India, you know, but also in Malaysia, for example. They've done really well. And I think they believe that they have the expertise you know, to expand their business and their product offering in and amongst the emerging markets. Certainly, if you look at their history, they've done much better in those sort of economies than they have in the more developed economies, which tend to be very competitive. So it'll be interesting to see. It's not a big number, you know, for them in terms of this disposal, but it'll be interesting to see just how successful they are, you know, with deploying this focus strategy on emerging markets.
Right, so famous brands not doing too well in the UK, but the trading statement today showing sales growth of about 76% for the likes of Steers, Wimpy, and signature brands like at Vuvuzela, Turn & Tender, and Meteos. Those sales were up 36%, but they did indicate in that statement that violent unrest that we saw in July had quite the impact on them.
Yeah, so this is one of the first companies that have come out, you know, over a reporting period that covered those July riots. This was a reporting period that ended in August. And of course, I mean, the sales numbers themselves show a massive improvement compared to the same period last year, as you would expect. Remember, last year, for most of the period, you know, there were restaurants were closed and they were under a hard lockdown. The slight improvement in those lockdown conditions saw a 70+ increase in their mainstream brands, which I think kind of makes sense. But of course, I think for me, as you mentioned, the impact of those riots on the retailers is something that we're going to be very interested in. They mentioned their Westmead branch, which is in the Pinetown area in KZN, was looted. That's a massive facility that they have, a distribution facility down there. And I think the fact that they managed to recover quite quickly showed, I think, very good resilience and very good planning from them in a disaster recovery sort of setup. But of course, the enormous cost, I think, of that looting still to be counted for lots of South African companies down the line.
That's right, and as long as people support the likes of Wimpy, and so I'm sure Famous Brands will be able to cover those big costs that came through from the rioting. Nesan Nair from Sasfin Securities joining us there to bring us a wrap of the markets day. So